Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring the proprietary bull bear point and figure market breadth summary chart for March 17th, happy St. Patrick's Day, by the way, 2019. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 1.40 rose from 1.04 last week. The total count of securities in bullish or bearish patterns decreased 1% to 3,034. The count of bearish stocks decreased 16%, while the count of stocks in bullish patterns increased 13%. The Pirls P&F market breadth summary chart shows us a market now 10 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 98 points for the second decline in 10 weeks. At a positive 474.89 points, it has fallen below the June 2018 top and continues below the February 2019 top and the October 2017 top, and continues above the remaining 5 tops above plus 100 in the last 30 months, as well as continuing above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation mode nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily in a Woody's uptrend is now at a positive 173.83. up from a negative 86.60 last week. It had only 2 days below zero and continues outside the plus or minus 50 range. It will need to fall back into that range in order to form a zero line reject long entry point. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 17 weeks ago, while the daily CCI 20 began a Woody's uptrend 8 weeks ago. The CCI 20 weekly in a Woody's downtrend at positive 123.78 rose from positive 93.84 last week. With 6 weeks above zero, it is now in a Woody's uptrend and continues outside the plus or minus 50 range required for a valid zero line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive and all of the bottom 5 are negative. Summary: some tech, gold and silver and REITs on the top. Oil services and brokers on the bottom. Bullish, CompTech and REITs continues in the top 5. Disk drives and computer hardware have left the bottom 5. Oil services continues in the bottom 5. Bearish brokers continues in the bottom 5. Gold and silver has entered the top 5. Focus this week. In BASEL III Activates Gold, gold will bring down the Fed. Episode 1817A. Dave of the X22 Report YouTube channel explains the effect that BASEL III defined gold standard set to begin March 29, 2019 will have on the Federal Reserve fiat monetary system. Thank you for watching this week's Santu Pirls Stock Market Commentary video, featuring, as always, the proprietary bull, bear, point, and figure market breadth summary chart compiled by Donald Pirl, www.s2pmarketsignal.com. For Santu Pirls Stock Market Commentary, I'm Cynthia Pirl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.